name is David Muir. I'm a partner at PJT Partners, and I help our clients navigate geopolitical and regulatory risk. I'm delighted to be here with you today. This is a region that's very important to PJ Partners. On the subject of investment, we recently acquired our wonderful long-term partner, De Novo Partners, led by May Nasrallah, and so this is a market that's already very important to us and will become increasingly important to us. But more importantly, I'm delighted to be asked to moderate such a distinguished panel. Now, some of you may recognize that I've got a Scottish accent, and there's a joke that you don't mistake a Scotsman for a ray of sunshine. And I'm going to try and make this optimistic. So many of these sessions on geopolitics are very down. I'm going to make this very kind of upbeat and optimistic. And I can do that because of this remarkable panel. Now, they say that choppy seas make strong captains. And I've got some fantastically strong captains here. So to my left, we've got Roberto Hornweg, who's the CEO of Standard Chartered in Europe, Middle East, and Africa. Next to him is a living legend. I'm very honored to be with Naguib Sawiris. Naguib can tell us a lot about how you can create incredible value in situations which on paper look very, very risky. So Naguib, thank you very much for joining us. And then finally, we've got Burak Doğuloglu, who again has a very interesting job in driving investment into Turkey. So let's get going, gentlemen. I think I'm going to be put through my paces with you. I've been backstage with you. I think this is going to be pretty lively. So my first question to you is, what are the geopolitical trends that you're particularly interested in, and why? So, Roberto, why don't I start with you?
Thank you, and thank you all for joining us today. We've heard already this morning about these extraordinary seismic changes that are going on geopolitically, and I think that it's important to differentiate between headline risk and then what's actually happening on the ground, certainly in terms of trade and investment. So when we look at this region, it's clearly over the last decade or so risen in prominence, both in terms of the geopolitical stage, but also in terms of investment, from its ability to invest abroad, an extraordinarily important and influential investor, and then more recently, its ability to attract flows in. So when we look at these dislocations, the first thing I would observe is that the GCC, and in particular the UAE, is a huge beneficiary of these dislocations, also from what we've heard in the previous panels. We will then speak later on about what this means for de-dollarization, currency flows, etc., trade corridors. But I think the biggest thing that's happening is that the trade corridors are getting redefined. So whether globalization will go up, down, change for sure, again, that I think is the biggest influence of all the geopolitical changes, is how trade corridors change, and then investment follows those. So that, I think, is really the stage that is being set by all these geopolitical challenges we're seeing.
Yeah. Naguib, could I bring you?
For me, it's much easier because I am concentrating on emerging markets, Africa, and the two things that we have to watch out is globally all these developments between the big guys, China, the US, and there is a temptation of dictatorship growing even in democratic countries. Like I always call Mr. Trump as the democratic dictator because he was democratically elected. This is one part, and the other part is what's happening in Africa now is with all these military coups d'etats. In West Africa, you have 4 or 5 countries in the last 2 years where you had a military coup. And we were all very happy when Africa was moving into democratic systems and so on. So there is like a reverse now to these military leaderships. And that influences very much the decision to invest because you are at that point, you are at the mercy of this young officer, wherever he is in this country, at his mercy. Because once they come, all the legal agencies and all the implementation of laws and all that becomes secondary. And I don't want to give examples because I have interest in some of these countries and I'm known to make problems for myself most of the time. But that's something that is harming a lot of business opportunity for Africa, and Africa needs a lot of investments. And in my personal opinion, Africa is a very rewarding continent if you have the patience and the guts to go there. But as I said, this new development is very impeding and not good news, you know. In addition to other countries like Libya or Tunisia and Libya was suffering from the civil war and so on. So many, and Sudan, for example, also. So it's making not everywhere in Africa accessible and possible for investments, you know.
Thank you. Burak.
So for me, I can say, I can agree on the great power rivalry because it's affecting the global, supply chains, and it's also affecting the financial markets. Secondly, I would say the, rule-based trade is under risk, and, one country is over-subsidizing, the other one is over-tariffing, another region is over-regulating, and etc. And it's a really big risk for the investors, that we observe. And last comment, Turkey is too much integrated with Europe. 43% of the exports are to European Union, and if we add the rest of the Europe, it's more than 50%. So the current situation in Europe, the economy is not growing, there are some security challenges, and etc. It's a major concern, in our part of the world, that investors are considering.
And could we do a little bit of a double click on Turkey itself? Because you can make the argument that you're in a very kind of tough neighborhood, right? But I was just looking at some figures the other day. You had record investment flows, FDI investment flows of 11.3 billion last year. That's up nearly like 6% on last year, whereas globally FDI flows were down about kind of 8%. In some cases, in some European countries, they were down like 30%. Like, what's your secret? Why are you benefiting from the disruption in supply chains and the shift away from China? What explains the success that you've had?
There are a few, some solid value propositions of the country. I mean, these are laid in the fundamentals, and thanks to the political leadership that we are providing a more safe environment for the investors. First of all, it's a resilient and fast-growing economy. The last 2 decades, the compound annual growth rate is like 5.4%. Secondly, we are committed to reform agenda. Every 18 to 24 months of period of time, we do reforms and we create a more up-to-date business environment. Thirdly, talent is available because in our competition, especially in the Eastern and Central Europe, the talent is a challenge. But maybe the most important thing, again, lies in the fundamentals, the geostrategic position of the country. Of course, we have been there, or our neighbors could claim the same, but the thing is, in the last 2 decades, we invested heavily to infrastructure. So we created a really super connected country, and we were, in the backstage just talking about the Turkish Airlines, the most connected airliner in the world, and we are hosting the most, busiest airport in the Europe, and etc. But maybe more importantly, our recent campaign is Nexus of the World. So we have a customs union agreement with Europe. We have 30 free trade agreements. 3 of them will be ratified soon. And if we add, our domestic market too, investors can reach out to 1 billion people, thanks to these, agreements. Yeah. And this is a country, member of NATO, member of OECD, G20 country, having a Turkic alliance, having good relations with the Islamic, community, this organization of Islamic countries, and etc. So it's a very well, location country for businesses to reach out to their markets. So, within the context of the supply chain shifts, so it's a good country.
And so to what extent do you see, for example, you had a big investment from BYD, the Chinese EV giant. To what extent is that investment predicated on BYD finding its way around kind of tariff barriers around the EU? Did you see more of that type of stuff?
Yeah. I mean, we already announced BYD coming, and we are expecting one more within a few weeks, and then there will be some more projects. So you said it very correctly. It's to avoid some of the recent tariffs and etc.
No, it's good to be you. Let's spend a little bit of time on another country within the region that our panelists know well. So another country that's seen spectacular FDI growth is Egypt.
Yeah.
And so FDI flows are up nearly 70% since COVID into Egypt. Nagib, what's kind of what's kind of driving that? Why should people be excited about Egypt?
The 70% was all from here. So we don't grow by 70. It was one deal that was astronomical, and it was made in order to support Egypt. So it has a political angle,
Yeah.
but it's a good deal for both parties because Egypt needed this lifeline injection, and in return, the land that has been acquired through this 30 billion donation is one of the prime locations of Egypt. We have a summer that's different than Abu Dhabi here.
Yeah.
So we have 20 degrees. The air is very cool. The water is blue, and the sand is very white. So it's a very tempting. So I would not say that the FDI is growing by 7 because it's a one-time deal. We have challenges in Egypt. So that we have two challenges, or actually three. One is that the dollar situation, the dollar is not stable, and we have a pressure on our local currency. The inflation is up to 25 to 30%, less than Turkey, but we don't have the economy of Turkey. And the third problem is that we have I will be polite and I will say over-ambition president who is doing mega projects that are requiring a lot of foreign currency, and we should have a second look at these projects and see whether we can just stop at where we are in order to save some of the expenditures we are doing. The good news is that Egypt is a big market. So it's 110 million people. We're finally having some good exports. So we export agriculture products of $1.5 billion. We have furniture. We are exporting, of course, also some of the oil and gas products. And the tourism is growing by 30 and 40%. And it's a big injector of foreign currency. And remittances from Egyptians abroad are also a very high number of $15–20 billion every year. And as long as they are leaving the dollar to be at a realistic rate, the Egyptians send their dollars back to Egypt. When they start trying to work against the market, the black market comes in. That's all of the good news.
Now, Roberto, I mean, Standard Chartered have just opened up in Egypt. Like, what drove that investment decision on your part?
We opened the bank there last year. We believe in Egypt as a growth story. As he was saying, the market's very big. When we look at there's a few factors. It is all about execution. But Egypt, I think with the IMF reforms, the structural reforms coming in, has very competent, I think, government and finance ministry now is able to fund. We led a big Eurobond for them. And so we think that it's on the way up. The challenges are there. There's inflation challenge. But we also see Egypt as having attracted a huge amount of interest in terms of financial investors into Egypt. Now, some of that obviously is the markets are liquid in Egypt, so people can come in and come out. But we feel it's on a path to growth. If you look at the overall trend, as part of this resetting globalization, we now have global EM trade coming up to 50% of global trade. Egypt will be a beneficiary of that. So we can see room for further FDI, which are not just the large one-shots. And that corridor between the Gulf and the UAE and Egypt is probably very strong. So we're very bullish about the ability for Egypt to have a growing say at the world trade table, for sure.
Let's spend a little bit of time at the other end of the corridor, i.e. here. I'm kind of personally very bullish on the UAE and the region. As I like to say, in a time of great power competition, it's good to be Casablanca. And this is a particularly productive Casablanca. I'd be interested in the panel's views on, what are some of the kind of opportunities here in the UAE and GCC in general? How do you think about the kind of prospects for the region and how it can kind of mitigate any challenges? Burak, can I start with you? Because there's recently been quite a lot of two-way between Turkey and UAE.
So yeah, I mean, recently we signed a comprehensive economic partnership agreement. It's like, expanded free trade agreement, and, we have been, having more close political relations too. So, and we are in the different corners of the Middle East. So I think these are complementary economies. So definitely in some fields we compete, but we see synergy opportunities more. Just a few examples. Before CEPA, the trade volume between two countries like around, single-digit level, $7-8 billion. 2023, like, 20 billion. Last year, almost $16 billion. So major increase in trade volume. On the investment side, especially in the last 3 years, investments have grown rapidly. Like, in the last decade, UAE invested more than 6 billion to Turkey, and Turkish investments into UAE is like 3 billion, but in the last 3 years, it has grown significantly. And historically, UAE has, larger investments in Turkey, but last year, Turkish companies invested in UAE more than UAE invested in Turkey. So this is a kind of, clear indicator how countries can collaborate and create synergies. And one more comment maybe on the trade routes. I take my note while Roberto was speaking. So countries has to work on some new mega projects. Like, with UAE, Turkey, and Iraq, we are working on a new development route. So such projects may contribute to the global supply chain resiliency.
Naguib, how do you view?
I think I watched Mr. Mohammed Swedi's explanation here when he was asked about competition from other Gulf areas. I mean, personally, because maybe I'm a bit biased to the Emirates here, but if the Emirates started this path 30 years ago, so someone comes in 1 year and 2 years and wants to do the same, the 30 years are still there.
Yeah.
Especially that people here, they wake up in the morning and they ask one single question. Each leader of any of the 7 or 8 Emirates wakes up in the morning and says, what can I do better? Where am I still not 100% efficient? And they come every few months and every year with new ideas, with new diminishing bureaucracies. They try to shorten the bureaucratic routes in anything, in licenses and real estate and tourism and restaurants and airports, And they surprise the world all the time with the intelligent decisions they take, like moving the Dubai airport to Dubai South, and imagine the value of the land now, and the airport is in the middle of the town now because of the growth. So it's not like people here sit and down, we cannot do better than what we have. On the contrary, they wake up every day and they challenge themselves. You don't see lazy people here who don't go to work. You don't see dirt on the floor. You don't see corruption. You arrive in the airport, you are outside in 2.5 minutes, 5 minutes. I believe they are more efficient here than Europe. I mean, go to Heathrow and then.
I try and avoid it, actually.
No, I'm very known not to throw compliments like that, I swear. But I'm telling you, last year, 1,500 Egyptian companies moved their headquarters to Abu Dhabi. 1,500, and most of them want to list on the stock exchanges here. Maybe one advice, and I don't want to go into politics, one advice is that the stock exchanges should unite. We discussed that. The Dubai Stock Exchange, Abu Dhabi Stock Exchange should unite. They will become such a powerful stock exchange, and you would get things more, and the liquidity would be bigger, and companies will run to list here, because why? Because not every country in the Middle East has a independent regulator. I claim that the financial regulators in this country are independent. So there's no political interferences. There is no. Anybody who's square and clean and has a good record, and is honest, can come and do business here with no restriction.
Thank you. Roberto?
Yeah, so I mean, just echoing, the execution by the government here has been spectacular for decades on end. So that puts it at an extraordinary advantage. If we look at what the opportunities are going forward, I think they're far and wide. There's an enormous opportunity in terms of the private banking corridor that we're seeing also at Standard Chartered. And I think for that, you can have further financial regulatory progression, have an increase on assets under custody in the UAE that can bring an enormous amount of industry and innovation here. Non-energy trade with Asia is going up, growing at 15% a year. So the UAE is under this unique regulatory framework that we've heard that allows both a very attractive inward investment and a very important seat at the table of global investment by the large institutions here. So when you look at that combined with an extremely ambitious regulatory framework to keep pushing the business agenda, it's hard to see how there's any risk to that further progress. And with that comes a far more important sort of seat at the global financial table. So from our perspective at Standard Chartered, we are now looking at UAE and this region as one of our main hubs, just as important for us as Hong Kong, Singapore, and London have been. And we don't see that reversing anytime soon.
Thank you. I'd now like to kind of pull back. I'm very proud that we've managed to get through a panel on geopolitics without mentioning President Donald J. Trump. So let's focus in on the Donald in a little bit more detail. Now, one of the things that's really interesting about, there's many things that are interesting about President Trump, but one of the things is he's very, very energized about the dollar remaining the world's reserve currency. He's threatened countries that have signed up to BRICS with sanctions if they try and undermine the US dollar. With all the change that's taking place with the reconfiguration of supply chains that we've discussed earlier, Roberto, are you seeing any kind of threats to the supremacy of the dollar? I mean, Standard Chartered is probably the world leader in trade finance, so you're the canary in the coal mine, as they would say. What are you seeing?
So the first thing I want to say is that the signals that come out of Washington on the dollar are very mixed. Yeah. Because on the one hand, one day you'll hear we want to devalue the dollar against everything to be more competitive, and then the next day you will hear that the dollar hegemony can't be broken, and that clearly does not imply a global devaluation. So I think there's a couple of things. First of all, it's important to note that still pretty much 50% of global trades happens in dollars, SWIFT, all this sort of stuff is still very important. And a change away from that is very, very gradual and difficult to implement. There have been a variety of non-dollar new transactions being made, but they're always pricing, just because a trade happens in a different currency, if it's still priced with the dollar as a reference rate, that's not really de-dollarization. So obviously, RMB internationalization is a big focus, but I really struggle to see how we really move away from that world. We also have another factor which doesn't get spoken a lot, but the rise in digital money, blockchain, and tokenization plays very much in favor of the dollar, because the rise of stable coins and CBDCs maybe in the East and stable coins in the US and the fintech companies that develop them, that is already dollar-based, and that will be a growing percentage of the global pot. I think for sure, as different geopolitical events happen, you'll start seeing shifts, but we think that the cyclicality in FX rates happens all the time, but we don't think that it's way too early to call for this to be the beginning of the fall of the dollar hegemony. We don't believe that that's the case right now.
Thank you. One of the things that you all have in common, all got different experiences, but you are winners in markets where there's a lot of geopolitical risk. And so sometimes when we get into these debates about geopolitics, it feels like Chicken Little and the sky's about to kind of fall in. But, particularly with Chairman Suarez, you've made incredible value in, very difficult, complicated markets. Can I ask each of you, as we kind of come towards the end, what is the kind of key thing that you look for in your leadership teams that make them successful in markets that have got a lot of risk and hair around it, as they would say? Mr. Chairman, can I start with you, considering your
First, you
track
have to
record?
study the risks, But there is people forget something, People tell me, why did you go to all these difficult markets, Algeria, Syria, Yemen, and Iraq, and the answer is very simple, because the competition is less, and the margins are much higher. So yes, of course, you're taking a risk, but your returns, before they stole my company in Algeria, I was doing $1 billion in dividend every year.
Wow.
Yeah, so that's why they stole it, But okay, I got a couple of billions before they stole it. So there is a rationale. First, you have to study. Then the second advice is never partner with a local, politically connected entity, because the minute you have any dispute, they use their local connection to either steal your part or give you a hard time and so on. So not to partner. And definitely not with someone who is politically connected, or even locally. I mean, like me, I'm trying to avoid having a partner, local partner, everywhere I go, because in the beginning, everything is good. Once they see the money, they become very tensions, and they want to take your part. That's what happened to me in 3-4 countries of this part of the world. So the third advice, study whether there's a possible coup d'etat can happen any day or not, because once you have a relation with the man number one, suddenly this man is out and his second in command is there. So maybe the good advice is try to make your relations on all levels, so you are not surprised with what happens, But me, I believe very much in going in these difficult markets, because the reward is very high, because the competition is very low.
Heard it from the master. Roberto?
Well, look, for us, when you talk about leadership teams, what we look for deep domain expertise, because they're complicated markets for sure. We look for people that really understand that our job as a financial institution is to help solve our customers' problems. It's not just to provide a price. And the deeper you go in difficult countries or difficult times, the more important it is to provide a solution that works for your customer. And lastly, as we just heard, the ability to course correct is very, very important. So dogma and will get you in trouble in markets that change very quickly. So it's just challenging, and the talent war is outrageous, as you know. But it's critical. I think more critical in these markets significantly than in the sort of G3 economies.
Thank you. We've got 1 minute and 30 seconds left. So I'm going to close by asking 2 quick-fire questions. So the first question is, what is the kind of geopolitical risk that you think we in this room should kind of really focus in on, or the geopolitical risks that you're telling your teams to focus in on? And secondly, which country or region are you most optimistic about in the world, and why? Minute starting now. Burak.
I would tackle the second one. I think we are in the region, where investors can, mitigate the risks or, create higher returns, the Middle East. So he already mentioned about, some of the underlying factors, but, given the fact that the leadership in this, region is very hands-on, and they are collaborating a lot, compared to the previous periods. And I think resilience is here, agility is here, flexibility is here.
Fantastic. Mr. Chairman.
I second this opinion. So I think here is the best place to be, right now. But on the first question, what worries me most is the development of these world dictators, that we are siding away from democratic rulers. I mean, on the verge of shooting myself in the foot again. I mean, how do you quantify the leader of China? How do you quantify the leader of India? How do you quantify Putin? How do you quantify even Donald Trump, who was democratically? So there's a tendency today that dictators are in fashion. And you have, Donald Trump doesn't hide his impression that he's impressed with Putin. And when he sees a dictator, he says, where is my favorite dictator? So favorite and dictator should not go together. I mean, you understand? So this is what's frightening me, that we are now working with 5, 6 people in the whole world, and they are deciding the fate of the world, and each one of them has some nuclear nukes, and when the heat goes up, everybody's threatening with nuclear. And of course, what's happening in the Middle East now and Israel and Palestine is not helping also. I mean, we in the Arab world, we watched first the 7 October massacre, which was an idiotic action because it went to children, women, and so on. And then at the same time, the reaction is also unacceptable. 50,000 people to be innocent people mostly, not the bad guys. You didn't kill 50,000 bad guys. You killed 50,000 innocent people. So this is also not something that is helping us in this region, and we need to get this to a halt, especially when the power is more on the side of the aggressor and supported by blindly by, look at Mr. Trump's suggestion, take Egypt, take 1.5 million Palestinians, and that solves the problem. The problems don't get solved this way.
Roberto.
Extremely briefly. Okay. Look, the biggest risk I see from a financial perspective is that politically minded actions lead to enormous unintended consequences for financial and trade stability, because I think that the skills and the expertise are not matched. In terms of the biggest opportunity, for sure, it's the Gulf. There's no question, both in terms of the power to invest abroad and the attractiveness of attractive inward investment, whether it's infrastructure, tourism, financial services, et cetera. It's right now, there's no question that that is the differentiator.
Thank you. Well, look, I mean, we ran over our allotted time. The thing I would leave you with, which is remember, stormy seas make great sailors. And so we've been honored to have some great captains who know how to navigate the choppy geopolitical seas that we're going to go through. So thank you ever so much for your time.
Thank you.